Breaking news, coming from Maysville, Kentucky.
Okay, so Bitcoin's recent surge, it's really got everyone talking again, hasn't it? Pushing close to that all-time high.
It really has.
And the big question, I guess, is, is this just another rally, or are we actually seeing the start of something, well, much bigger for crypto's future? It feels complex.
It definitely feels like a pivotal moment. And what makes it so compelling, I think, is you've got several major forces all sort of converging at once in the crypto space.
Exactly. And that's precisely what we want to dive into today.
Mm-hmm.
We've been looking at, well, quite a range of things.
Mm-hmm.
The potential shifts in U.S. policy, the whole Trump effect idea. Then there's the regulatory stuff happening in Europe and Asia, which is moving fast.
Right, that global picture.
Yeah, and the impact of Bitcoin ETFs, that's undeniable. Plus growing corporate interest, the supply dynamics after the latest halving.
And that constant tension, right, between more people adopting it and the risks, the security, the volatility.
It's exactly that balancing act.
Yeah.
So our goal here is really to try and synthesize all of this, to give you a clearer understanding of the key drivers, maybe what they might mean for you, without getting too bogged down in the day-to-day noise.
Sounds good. Where should we start?
Okay, so let's kick things off with the potential Trump effect. That's certainly sparked a lot of discussion lately.
Yeah, following the election, there's this renewed optimism, you could say, around a potentially more favorable U.S. stance towards crypto. It's hard to ignore.
Absolutely. During his campaign, Trump made some pretty strong statements, didn't he, about wanting the U.S. to be a leader in crypto innovation.
He did.
There was even talk, I remember, of establishing a national Bitcoin reserve.
Mm.
I mean, that's a really significant idea when you stop and think about it.
It really is. And it seems like it's going beyond just rhetoric. You've got the appointment of David Sachs as a key advisor on crypto and AI, and the formation of a presidential working group that suggests a concrete effort to actually shape pro-innovation policies. The aim seems to be solidifying the U.S. position in these, cutting-edge techs.
And we also saw that executive order, didn't we? Focused on strengthening U.S. leadership in digital financial technology.
Yeah.
It paints a picture of an administration wanting to be seen as, well, forward-looking here.
Definitely. But there's an interesting contrast, though, with their stance on central bank digital currencies, CBDCs.
Yes, that's a really key point. What's the thinking there?
Well, the administration has voiced concerns, that CBDCs could pose risks to financial stability, individual privacy, maybe even national sovereignty.
Okay.
So as a result, the focus seems to be shifting towards regulating dollar-denominated stablecoins, but within the private sector.
Right, so encouraging the private side,
Hmm.
which leads us, I suppose, to legislative efforts like the Bipartisan Genius Act that's aimed at stablecoins.
Exactly, trying to provide a clear regulatory framework for them. So yeah, the U.S. strategy seems to be encourage private crypto innovation, especially stablecoins, while being pretty cautious about state-backed digital currencies.
Okay, that makes sense. Now, let's maybe pan out a bit and look at what's happening on the global regulatory front. What's the sort of general direction in places like the EU and Asia?
It's quite diverse, actually. You see different approaches. The European Union, for instance, they've recently implemented new regulations for crypto assets. MiCA, right? So that's a move towards a more structured environment.
And Hong Kong has made it pretty clear they want to be a major hub over in Asia.
Indeed. Hong Kong is actively working on that, trying to establish itself as a regional digital asset center. They've got specific rules coming out for both cryptocurrencies and stablecoins.
Okay.
Singapore, on the other hand, they've taken a slightly different route. Their laws are seen as relatively straightforward, and they even have tax incentives. That's attracted big players like Binance setting up there.
Oh, wow.
And we're also seeing more engagement from countries like, say, Brazil and the UAE. It really highlights just how widespread the global interest is now.
It really feels like different regions are trying to strike their own balance, find their own way. But you mentioned earlier the potential for problems if these global rules aren't somewhat aligned. What are the implications of that regulatory fragmentation?
Yeah, that's a big concern. The whole idea of an internet of value, where digital assets can move seamlessly and securely across borders, it really depends on some level of interoperability.
Okay.
If different regions create vastly different, maybe incompatible regulations, it could just create friction barriers to the global transfer of these assets.
Like trying to send an email, but meeting different providers for each country.
Exactly like that. It severely limits the potential. And that's where U.S. leadership is often seen as important, given its economic influence, maybe to encourage a bit more harmonization globally.
That makes perfect sense. Yeah, navigating this complex web of global rules is clearly going to be crucial for crypto going forward.
Definitely.
Now, let's switch gears a bit to something that has, well, undeniably had a huge impact recently. The approval of spot Bitcoin ETFs in the U.S.
Yes. November 2024. That was a real game changer, no doubt about it.
Why so significant?
Well, it essentially just provided a much more accessible, familiar route for traditional institutional investors to get exposure to Bitcoin, through their existing brokerage accounts.
And the numbers we've seen since then, they're pretty compelling, right? There's been a serious influx of capital into these things.
Oh, absolutely staggering. Just in May, for example, U.S. spot Bitcoin ETFs saw net inflows of around $2.8 billion.
Wow.
And on one single day, May 2nd, they pulled in nearly $675 million.
That's incredible.
And these ETFs, run by giants like BlackRock and Fidelity, they now hold over $122 billion in assets. That's nearly 6% of the total Bitcoin supply already.
6%. That's a substantial chunk.
Well, yeah.
And it's not just the ETF inflows indicating this growing institutional interest, is it? There are other signs, too.
That's right. You see companies like Strategy and MetaPlanet continuing their strategy of just accumulating more Bitcoin on their balance sheets. Leading Wall Street firms are starting to experiment with digital versions of investment funds. We even saw Abu Dhabi's sovereign wealth fund make a pretty sizable $408 million investment in BlackRock's Bitcoin ETF.
Right, the sovereign fund's getting involved.
Yeah, and smaller companies too, like DDC Enterprise, publicly stating their goal is to hold 5,000 Bitcoin in reserve. And maybe most notably, there are these reports, these whispers, that even JP Morgan might be considering letting their clients buy Bitcoin directly.
Wow. It really does feel like the institutional floodgates are maybe not wide open, but certainly starting to creak open, doesn't it?
It certainly feels that way.
And with all this increased demand, it's probably no surprise we're hearing some pretty ambitious price predictions floating around. Anthony Scaramucci, for example, talking about Bitcoin potentially hitting $170,000 within the next year.
Yeah, that's a significant jump from here. It's a bold prediction for sure, but he's not entirely alone in that kind of optimistic view.
Who else is seeing big numbers?
Well, you have Marshall Beard from Gemini and Tom Lee of Fundstrat. They've suggested a shorter-term target, maybe around $150,000.
Okay.
And Lee has even speculated about a much longer-term price, maybe $500,000 within 5 years. I mean, these projections definitely reflect the current bullish sentiment and the perceived impact of this institutional demand.
Okay, so the ETF impact is huge, driving institutional adoption,
Right.
fueling these optimistic targets. Now, let's try and connect this to another trend we're seeing. More corporations actually holding Bitcoin on their books.
Yeah, this is definitely an evolving trend. MicroStrategy is obviously the most prominent example, isn't it?
For sure.
They've been incredibly vocal about their Bitcoin acquisition strategy. They even talked about anticipating a supply shock after the recent halving.
And it's not just MicroStrategy anymore, is it? We're seeing other signs like firms, I think Bitmine was one, launching Bitcoin Treasury Advisory services.
Exactly. That suggests that more companies are at least considering adding Bitcoin to their corporate treasuries, exploring it as an option.
Yeah, the idea of Bitcoin as a legitimate corporate treasury asset seems to be gaining some traction, at least in certain sectors.
It does. Now, speaking of potential supply shocks, that brings us nicely to the latest Bitcoin halving. Maybe for anyone listening who's less familiar, could you just quickly explain what that actually is?
Sure. Right. So the Bitcoin halving is basically an event that's baked into Bitcoin's code. It happens roughly every 4 years. And what it does is it cuts the reward for mining new Bitcoin blocks in half. So miners get 50% fewer new Bitcoin for validating transactions. The most recent one was just back in April 2024.
Okay.
And it's fundamentally a mechanism designed to control the inflation rate of Bitcoin, the rate at which new coins enter circulation. It gradually increases its scarcity over time.
Precisely. It's all about that programmed scarcity. And historically, these halving events have often been followed by periods of price appreciation. Although it's really important to stress, these are usually longer-term trends, not like an immediate overnight reaction.
Yeah, it takes time to play out.
Definitely. The immediate effect is often felt most acutely by the Bitcoin miners themselves. Their revenue per block gets cut in half, right? So unless the price of Bitcoin goes up enough to compensate, it directly impacts their profitability.
And we saw companies like Marathon Digital, didn't we? One of the big mining operations. They were increasing their Bitcoin holdings and their mining capacity leading up to the halving.
Yeah, likely anticipating its effects, trying to position themselves.
Then Michael Saylor, obviously a big Bitcoin proponent, he's also voiced his expectation of a, bullish trend following in this latest halving. So it really feels like the halving adds another significant layer to that whole supply-demand picture.
It absolutely does. It reinforces that scarcity aspect, that sort of core design feature of Bitcoin, just as we're seeing this increased demand from various places we've talked about.
Yeah.
Now, with all this positive momentum, wider adoption, institutional interest, the halving effect, we really need to circle back to that crucial balancing act.
Right.
The ongoing tension between all this growth and the inherent risks that still exist with cryptocurrencies, security and volatility.
This is such a critical point, isn't it? Because even with more acceptance, those fundamental risks, they haven't just disappeared. Let's start with security. Owning Bitcoin, it means you are directly responsible for managing your private keys. That's a very different world from traditional banking.
It's a fundamental shift in responsibility, yeah. I mean, if you forget your online banking password, there's usually a process, right? You can recover it.
Yeah, click forgot password.
Exactly. But if you lose the private keys for your Bitcoin wallet, well, accessing those funds can become incredibly difficult, maybe even impossible in some cases.
A scary thought.
And then there's the whole challenge of, estate planning. How do you effectively pass on your crypto holdings to your heirs? It involves securely transferring these digital keys. It's just a much more complex process than listing a bank account in a will,
Definitely requires more planning. And even using hardware wallets, which are generally seen as a more secure way to store keys offline, even that isn't completely risk-free, is it?
No, you're right. Those devices can be lost, they can be damaged, they can malfunction. Any of those could potentially lock you out of your funds. So the bottom line is the security burden really lies squarely with the individual holder.
Okay, so security is one major ongoing risk. Now, let's talk about the other big one, volatility. Bitcoin's price, it can swing pretty dramatically.
Indeed. We've seen significant price corrections, haven't we? Like that recent 11% drop in just 24 hours. Bitcoin's value is just known for its unpredictability.
Yeah.
And it lacks those established, sort of standardized intrinsic valuation models that you have for some traditional assets. Plus, it's highly sensitive to macroeconomic factors.
Right. Things like inflation rates, changes in interest rates, the general health of the global economy.
Geopolitical events, too.
All of that can really impact market sentiment, and Bitcoin's price can. We even saw, I think, market dips following those announcements about potential tariffs.
Exactly. And of course, the evolving regulatory landscape we discussed earlier continues to introduce uncertainty, as does the potential for, new competing cryptocurrencies or maybe some technological disruption within the crypto space itself.
So many moving parts.
All these factors contribute to that inherent volatility, and they really underscore why it's so important to approach crypto investments with, caution and awareness, even amid all this growing adoption.
Absolutely. So, okay, let's try and bring this all together. We've considered all these interconnected forces, the political shifts, the regulatory evolution, the economic impacts from ETFs and corporate buying, the supply dynamics of the halving, and these persistent risks. What does this all suggest about the complex future of Bitcoin?
Yeah, where does it all lead?
Well, we are seeing these quite optimistic projections for Bitcoin's price, aren't we, in the coming years? Some analysts are throwing out ranges for 2025 and even much, much higher figures in the long term. Some even speculating about, figures as high as $1 million or more eventually.
Those headline-grabbing numbers.
Right. But as we've really stressed throughout this, these forecasts are generally built on pretty bullish assumptions and specific market conditions continuing.
And it's absolutely crucial to remember the cryptocurrency market remains inherently volatile. That hasn't fundamentally changed. However, the evolution we're seeing, Bitcoin moving from being this relatively obscure sort of fringe asset towards becoming a more mature, more institutionally integrated market.
Yeah.
That does suggest its growth path might follow different patterns compared to previous cycles.
Oh.
Well, you've got the tightening supply because of the halving. You have evidence of strong conviction among long-term holders who aren't selling. And then you have this rising institutional demand coming in through things like the ETFs. Those factors together do point towards the potential for continued price expansion.
Okay. Potential being the key word there.
Yeah.
So just to summarize then, we've explored the possible influence of more pro-crypto policies, particularly in the U.S. We've looked at the diverse and still evolving global regulatory landscape. We've seen the significant impact of Bitcoin ETFs driving that institutional adoption,
Yeah, that's been huge.
the supply-reducing effects of the recent halving, and this ongoing need to balance the excitement around adoption with those inherent risks, especially security and volatility.
Exactly. Those really seem to be the key dynamics shaping Bitcoin's path forward right now. It's a fascinating mix.
It really is. And that brings us, I think, to our final thought for you, the listener, to maybe chew on. Considering all these powerful and sometimes quite contradictory forces at play, the politics, the regulation, the institutional money, the fixed supply, the risks, what do you think will ultimately be the defining factor? What's going to determine Bitcoin's long-term success and its eventual role, whatever that may be, in the global financial system?
Yeah, what's the critical element?
It's definitely a multifaceted picture, isn't it? And we really encourage you to continue doing your own research, your own critical thinking about this fascinating and undoubtedly complex future for cryptocurrency.